You cannot return a camper van. There is no counter to walk up to, no 30-day window, no receipt that gets your money back, which is a problem because right now a great many Americans are trying to do exactly that, and the only tools they have are a consignment lot and a for sale sign taped inside a windshield. By March of 2026, new RV registrations in the United States were down almost 22% against the year before. Class B camper vans specifically, down about 17%. Meanwhile, used sales climbed while new sales collapsed. One owner sat down and worked out what a single night in his van actually cost him once he counted everything: $1,100. We will get to how a number like that happens, because 5 years ago, a new camper van was the hottest thing on four wheels in America. Retirees were wiring deposits on Ford Transit and Ram ProMaster conversions they had never seen in person, and plenty of them paid thousands over sticker just to jump the waiting list. The industry pushed more than 1.5 million new RVs out to American driveways across 2020, 2021, and 2022, including a record 600,000 in a single year. Millions of people bought into this. A lot of them now want out. Back then, most of these buyers were doing something completely ordinary: driving a paid-off sedan, looking at brochures, watching sunset footage of a van parked at the edge of the Utah desert with the back doors flung open. The pitch was simple, and it was a good one. Buy the van, skip the hotels, see the country while your knees still work. Nobody in those brochures mentioned the storage lot on the edge of town or the insurance letter, and nobody ran the arithmetic out loud. The scale of what happened is worth understanding before we get into the reasons. The RV Industry Association spent most of 2026 walking its own forecast backward, eventually cutting the full-year projection to a range of roughly 300,000 to 328,000 units, down from 342,000 the year before. Economist Michael Hicks at Ball State University, who tracks the industry closely, has pointed out that most buyers in this market are in their 50s and 60s with real retirement savings behind them. These are not impulsive shoppers. These are careful people who did the math wrong because the salesman handed them the wrong math. So let's do it properly. Here are the 9 reasons Americans are unloading vans they bought brand new, roughly in the order the reasons tend to hit. Number 1, the payment outlived the excitement. When these vans were selling at the peak, dealers solved the sticker shock problem the same way boat dealers always have. They stretched the loan. A camper van built on a Mercedes Sprinter chassis can land north of $180,000 once the conversion is finished, and no ordinary household absorbs that on a 5-year note. So the term went to 12 years, then 15. On some of the bigger builds, 20. Now think about what a 20-year loan means on a vehicle. Your grandchildren will be driving before that thing is paid off, and the interest rate you accepted in 2022 does not soften with time. It just sits there, month after month, long after the novelty of the first trip has worn completely off. Owners describe the same moment over and over. Somewhere around year 3, the payment stops feeling like an investment in freedom and starts feeling like a second mortgage on a garage they cannot park in. I mean, think about that for a second. A 20-year loan on something with tires. There is a detail buried in the financing that makes this worse, and it is the reason so many owners feel stuck rather than merely disappointed. A recreational vehicle loan is usually structured with the interest weighted heavily toward the front end. So in years 1 through 4, most of that monthly payment is servicing interest, not shrinking the balance. The owner is writing large checks and watching the principal barely move. Meanwhile, the vehicle those checks are attached to is doing the opposite. It is dropping in value fast, and it is dropping fastest in exactly the years when the loan balance is most stubborn. That gap between what you owe and what the van is worth is where this entire story lives. Every reason that follows either widens that gap or makes the owner more desperate to escape it. Number 2, the depreciation cliff nobody put in the brochure. Most Class B camper vans shed somewhere between 20 and 30% of their value in the first 2 years. That is not an unusual figure for vehicles in general, but it lands very differently when the sticker was $180,000 instead of $30,000. Take 25% off $180,000 and you have lost $45,000 before the tires need replacing. The vans bought at the top of the market got hit twice, because those buyers also paid a market premium on the way in. One owner interviewed about his experience described paying $240,000 for a Winnebago Revel at the height of the frenzy. Numbers like that make the second half half of the story inevitable. And the chassis underneath is not immune either. Kelly Blue Book data on a 2022 Mercedes Sprinter cargo van, before anybody adds a single cabinet to it, shows roughly 44% of its value gone in 3 years. That is the bare van. Now stack a conversion on top of it, and understand that a used conversion gets judged on the reputation of whatever small shop built the interior, and the Mercedes badge on the grille does very little to help. There is a comparison that puts the whole purchase in perspective. In 2026, a new Class B works out to somewhere between $47 and $85 per square foot of living space, and a typical unit gives you 60 to 90 square feet total. A Class C motorhome runs $12 to $25 per square foot. You are paying a 200 to 400% premium for the privilege of living small. That premium made sense when the van was easy to park and easy to sell. It makes considerably less sense when neither of those things turns out to be true. 2 years in, the owner is upside down. 3 years in, deeply so. Selling requires writing a check to the bank just to hand over the keys, which means the exit door has a toll on it. That trap alone keeps thousands of unhappy owners sitting in vans they no longer want, waiting for a market that is moving the wrong direction, and that is only the part you can see coming. The next one arrives in the mail. Number 3, the insurance letter. Buyers reasonably assume that a camper van insures like a van. It has a Ford badge on the grille. It sits in the driveway next to the pickup. How different can it be? Very different. Insurers do not classify a Class B as a van. They classify it as a specialty recreational vehicle, and the premium reflects 3 things at once. The replacement value is enormous, often $160,000 or more. The components are custom, which means a damaged cabinet or a cracked composite panel costs several times what a standard van part costs, and the pool of shops qualified to repair a conversion is small, which means labor rates go up because there is nowhere else to send it. One quote reported by an owner comparing coverage came back at $3,200 a year for a new Class B against roughly $1,400 for a comparable Class C motorhome. That was the same insurer, the same driver, and the same garage. That is the kind of number that makes accountants wince, and it arrives every 12 months, whether the van moves or not. There is a second wrinkle that catches full-timers and long-trip owners. Some policies distinguish between a van used recreationally and a van used as a residence, and the coverage that protects your belongings inside it is not automatic. Owners have discovered this at the worst possible moment, standing in a parking lot in New Mexico looking at a broken window and a missing laptop, being told that the contents of the vehicle fall outside the policy they thought they had. If you own one of these, that is a phone call worth making this week rather than after something happens. But the insurance bill is at least predictable. It shows up once a year on a schedule. The next problem shows up without warning, and when it does, you will find yourself standing between 2 service departments that each insist the other one owns it. Number 4, you did not buy one vehicle. You bought 2, and they hate each other. This is the reason that quietly ends more van ownerships than any other, and almost nobody understands it before signing. A camper van is a chassis and a coach. The chassis is the Ford Transit, the Ram Pro Master, or the Mercedes Sprinter underneath, with its engine, transmission, brakes, and emission system. The coach is everything the converter added on top: the refrigerator, the water pump, the lithium battery bank, the inverter, the diesel heater, the cabinetry, the roof fan, the solar controller. Now, the Mercedes dealership will service the chassis. They will not touch the coach. The RV service center will work on the coach. They will not touch the drivetrain. So when something fails, the owner becomes a project manager, hauling a $200,000 vehicle between 2 facilities that each insist the other one owns the problem. And the RV side of that equation has a backlog. Owners routinely report vans sitting on a service lot for 6 weeks, 10 weeks, an entire camping season, waiting on one part. You would think somebody would have flagged this before the sale. Nobody did. The chassis you picked makes a real difference here, and this is the kind of thing buyers only learn afterward. Independent shop data suggests Sprinter maintenance runs roughly 20 to 40% higher than the equivalent work on a Ford Transit or a Ram Pro Master. The Mercedes badge carries genuine common engineering behind it, but it also carries a smaller network of technicians willing to touch a modern diesel with an emissions system that throws warnings if you look at it wrong. A Transit can go to almost any competent shop in any small town in America. A Sprinter frequently cannot, and finding that out 300 miles from home is a specific kind of miserable. There is one more thing about the coach side. The conversions built during 2021 and 2022 came out of shops that were hiring fast, working through supply shortages, and substituting whatever components they could actually get. Buyers who own vans from that window report a higher rate of nagging electrical and plumbing gremlins than owners of vans built before or after it. Those two model years also happen to be exactly the vans flooding the market right now, all of which is survivable if you are actually using the thing. So let's find out whether anybody is. Number 5. The nights per year math. This is the one that finally breaks the emotional attachment, and it is worth sitting with. Before the purchase, almost every buyer imagines the same calendar. Spring in the Smokies, summer following the grandkids' ball games, fall in Colorado, winter down in Arizona. Then real life happens. A knee replacement takes out a spring. A daughter has a baby. The dog gets old and cannot be left. Gas hits a number that makes a long haul feel foolish. Campground reservations at the good national parks have to be made 6 months ahead, and by the time you remember, they are gone. Owners who actually track it usually land somewhere between 12 and 25 nights a year. Now put that against the real annual cost. The payment, insurance, storage, registration, and maintenance on a new Class B routinely totals well past $20,000 a year before a single gallon of diesel. Divide 20,000 by 18 nights and you get somewhere near $1,100 per night of use. That is the number from the top of this video. You could stay at very nice hotels for $1,100 a night. Somebody else would make the bed. Run the same comparison against renting and it gets harder to look at. A comparable camper van rents for somewhere between $150 and $300 a day, depending on season and region. To lose as much money renting as you lose owning a new Class B, you would have to be on the road for something in the neighborhood of 4 to 6.5 years straight, continuously, without a break. Almost nobody does that. Renting also means zero storage, zero winterizing, zero insurance, zero surprise repairs, and the freedom to try a different layout next spring when you decide the wet bath was a mistake. That is the calculation nobody does at the RV show, standing in a beautifully lit unit that smells like new upholstery, with a salesman explaining that this particular model is the last one at this price. If this is useful to you, take a second and subscribe. I break down the real numbers behind vehicles in the RV market every week, and I do not take manufacturer money to do it. Alright, so here is where it gets genuinely frustrating. Number 6. The van does not fit your life. Literally. A Class B runs 18 to 25 feet long and often stands close to 10 feet tall with the roof equipment. That is taller than a standard garage door and longer than a lot of suburban driveways. So it goes on the street until the neighborhood association sends the first letter. Then it goes to a storage lot, which runs anywhere from $80 to $300 a month depending on the city and whether you want it covered. Now the vehicle you bought for spontaneity lives 20 minutes away behind a chain link fence, and every trip begins with a 40-minute round trip just to retrieve it. Spontaneity was the entire selling point. That was the whole idea. There is a second dimension to this that surprises people. Once the van is stored off-site, it stops being used casually. The battery drains, the tires flat spot, the water system sits. A vehicle that is not used regularly deteriorates faster than one that is, which means the storage decision quietly generates its own repair bill. And a van that sits is a van whose systems are all aging on the same clock. Every one of them. Number 7. The systems age badly, and they age all at once. A pickup truck from 2021 is still a good pickup truck in 2026. A camper van from 2021 is a good van attached to 5-year-old appliances, 5-year-old plumbing, and a 5-year-old electrical system that was installed by hand in a small shop in Indiana or Oregon. The RV Dealers Association puts routine annual maintenance on a Class B somewhere between $1,000 and $3,000. That is the routine part. The surprise part is where owners get hurt. Forum posts from long-term owners describing $10,000 in unplanned repairs in a single year are common, and the culprits repeat. A generator goes, then the refrigerator, or the water pump, or the inverter, and eventually the macerator pump, which is exactly as unpleasant as it sounds when it fails. Experienced owners have a rule of thumb for this. Set aside 10% of the purchase price every year year for maintenance and surprises. On a $180,000 van, that is $18,000 a year, set aside just in case. Nobody says that number out loud on the showroom floor. And there is a category of spending that catches almost every owner by surprise because it does not show up as maintenance and it does not show up as a failure. It is the modifications. Owners who keep a van past the first season typically add $3,000 to $8,000 in upgrades. More solar because the factory panel does not keep up. Better suspension because the ride over a rough Forest Service road rattles the cabinets loose. Real storage because the designer who drew the interior clearly never packed for 2 people and a dog for 3 weeks. None of that money comes back at resale. The next buyer sees a van with somebody else's ideas bolted to it and prices it accordingly, which brings us to where all of these vans are actually ending up. Number 8, the vans are not disappearing. They are moving. Walk a consignment lot in Florida, Arizona, or Oregon this summer and you will see the same thing. Rows of low-mileage camper vans, 3 to 5 years old with 15,000 miles on the odometer and a full tank of unused propane. These are barely used vehicles, owned by people who wanted the life the brochure described and discovered they wanted the idea of it more than the reality. Pay attention to this next detail because it explains the whole market. Used Class B sales have actually held up better than new ones this year. That is not a sign of health. It tells you the supply of used vans hitting the market has exploded and buyers know they have leverage. The split in who is still buying tells you the rest of the story. While Class B camper vans stalled, factory shipments of the big motorhomes held up better and in some months grew. The chief executive of one large dealer chain put it plainly earlier this year, saying that affluent retirees are still buying while middle-income buyers have simply decided this is not the year to commit. The people who bought a van because it seemed like the sensible, affordable way into the lifestyle are exactly the people discovering it was neither, which is fine, right up until the moment one of those owners decides to find out what their van is actually worth. Number 9, the trade-in conversation. This is usually the worst afternoon of the entire ownership experience. The dealer walks around it once, checks a screen, and delivers a number that is often 40 to 50% below what the owner had in their head. There are 3 reasons for that, and none of them are personal. First, the lot is already full of nearly identical 2021 and 2022 units because everybody bought at the same time and everybody is selling at the same time. Second, new RV sales are down sharply across the board in 2026, which means dealers are cautious about taking on inventory they may sit on for a year. Third, a used conversion is a used house as much as a used vehicle, and the dealer has to price in every appliance he cannot personally vouch for. And when the owner calls the dealership they bought from, hoping for some goodwill, they generally find that the enthusiasm has cooled considerably since 2021. So the van goes back on the consignment row with a sign in the windshield next to 12 others exactly like it, which brings the whole thing back around to something worth saying plainly. The van was never the problem. The Transits, the Pro Masters, the Sprinters are decent, capable vehicles. What broke was the math around them, and the math broke because it was built on a peak. Peak prices, peak loan terms, peak optimism about how much traveling a person would actually do in retirement. When any one of those assumptions softened, the whole structure leaned. In 2026, all 3 softened at once. It is the same pattern that has always run through boats, motorcycles, and second homes at the lake, and recognizing it early is worth more than any single vehicle recommendation. There is a version of this that works, and it is worth knowing if you still want one. Buy used, 3 to 5 years old, from an owner with maintenance records, and let the first owner absorb the depreciation cliff. Get a qualified RV technician to inspect the electrical and plumbing before money changes hands, not after. Price the storage before you price the van, and be honest with yourself about the number of nights, because that single number decides whether this purchase is a joy or a burden. None of that is exciting. It is also the difference between a van you love and a van with a sign in the windshield. So now you know what these vans actually cost to own and what they are worth when you try to leave. Watch the breakdown on screen now, where I go through the specific model years and chassis platforms that are holding their value in 2026 and the ones I would walk away from.